As I've been discussing with you, China's economy and stock market are completely on tilt. And I kind of made a couple jokes in the past videos of like, oh, I like wonder where they're going to take it to next after some very extreme measures by the government to stop the hemorrhaging. We have an update, and this one is probably going to blow your mind a little bit. China's quant clampdown risks damaging fragile markets for years. A sudden crackdown has sparked a frenzy as quant funds suffer losses. So to give you the little quick TLDR of what in the world is going on, over the past couple months, China's stock market has been just nosediving. It's for a multitude of reasons. You have the shadow banking issues, you have the real estate issues, you have the population issues, you have the political discontent, you just have really their economy slowing down, and it goes on and on and on. So there's many reasons for it, except now it's getting out of hand to the point that the government is taking a lot of steps to try to stop it. For example, they basically said no more shorting. That didn't really help it. Then they went to all the big guys and they said, hey, not only can you not short, but you're not even allowed to be a net seller of your long positions in the first half hour or the last half hour. And that was pretty crazy, but that didn't help. Then they went to the quants. They're like, hey, you have all those fancy schmancy computers that we don't really understand, and we think that that might be a problem. So stop what you're doing. And they're like, what? And now this is getting out of hand that those quant firms, they're hemorrhaging, making the whole situation even worse. Chinese hedge funds were looking forward to a holiday break from the market turmoil when trouble started brewing last month. One manager had his short selling orders abruptly rejected by brokers, i.e., no more shorting. Another was cut off from the stock market completely. Regulators turned up on trading floors at multiple funds to monitor transactions per person. As one fund put it, 3 sessions of chaotic trading, quote unquote, felt like a whole year to us. Imagine that. You're going to the big funds. Some shadow-esque government regulator just walks in and they're like, we're watching you, and if you do something we don't like, you're gonna have some questions to answer. The scene's extraordinary even by the standards of a market that has long operated under the Communist Party shadow, played out in recent weeks in a clampdown that's rewriting the rules of computer-driven trading in China. The country's once booming quant industry has become the latest casualty of Beijing's campaign to stop a $4 trillion sell-off in stocks. This is massive, not only by magnitude, but also by percentage. The US market, new all-time high. European markets looking very good. You have Japan's market, new all-time high. Australia looking good. China's market, For international investors becoming increasingly skittish about China, the sudden trading restrictions give them more reason to stay away. China saw a record 6 months of outflows from the equity market until this month. The foreign direct investment is at a 30-year low following unprecedented crackdowns on the tech and property sectors that have stifled growth. China risks losing out further to countries like India and Japan, which are enjoying a surge in investment. Folks, I get it. If you listen to some of the legends on Wall Street here in the US, they're like emerging markets, look at China, look at China, look at China. They were dead wrong. I've been screaming from my digital perch here, China, if you fast forward a decade, 2 decades, it's not going to be the second economy. It's not going to be the world's second market. It's not. The US is going to remain supreme. And then from there, most likely, India is coming to number 2. And in fact, I don't even think China goes to 3. I think it goes to 4 because I think what we're going to see is a South American country going into the 3rd spot. I get that if you listen to politicians, you're going to hear, China's our biggest issue. It's our biggest issue. It's not. In the short term, there might be problems with Taiwan and political discontent and all that type of stuff. But like I said, a decade or 2 down the line, they have very serious problems. These seemingly panicked actions by authorities risk undermining all the good work done in the past 2 decades to give China access to global pools of capital. He said that the moves will make even the most battle-hardened investors question whether China is worth the risk. In my humble opinion, it ain't. The new restrictions are sweeping. Quant funds, which rely on computer algorithms to carry out trades, will be scrutinized and new entrants will have to report their strategies to regulators before trading. Beijing will also expand the scope of reporting to offshore investors via mainland to Hong Kong trading link. Some people are still taking advantage of the weakness and they're basically trying to stop that. The crackdown adds to a series of moves aimed at halting a multi-year plunge in equities, which have been slammed by the housing crisis, weak economic growth, and lingering tensions with the US. It also echoes the heavy-handed approach that has been used to clamp down on sectors from the internet to education platforms. The risk premium on Chinese stocks has to go up going forward because some institutions are going to be unwilling to trade this market. And this is on top of the geopolitical concerns that many foreign investors have had about investing in Chinese stocks. So for those of you who are considering it, potentially interested in it, or maybe you're even looking at Chinese companies trading on the US market through ADRs, American Depository Receipts, very important for you to consider what's going on because it is a no bueno situation. And as I said in previous videos, where I'm always excited for the next one because each step that the regulators are taking is seemingly more ridiculous and unheard of than the previous one. Yeah, I'm still excited for the next one because the Chinese government is showing that they are not going to stop until they stop the hemorrhaging, and we are seeing truly unprecedented steps being taken. And yeah, I'm excited to see where it all plays out.